Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Capital Good Night. Today is Wednesday, March 18th. I'm Huang Peng Wei. We'll look at some topics. First, we've already discussed GTC, which actually touched on some cutting-edge themes like space data centers or space chips. Also, we'll briefly cover some news from OFC today. Actually, OFC also mentioned space. We can see both conferences discussed it, and most space stocks saw significant gains yesterday. So, the space sector is back in the spotlight now because we're currently in a period around mid to late March, and SpaceX is expected to go public by late June, though the exact date is unknown. So, from now until June, there seems to be a window to trade space stocks. We'll get into more details later. Of course, OFC also seems to have introduced many technical updates and iterations. It also confirmed that optical communications will remain vital, so those stocks are worth watching. Additionally, the overall market sentiment hasn't been heavily impacted by the war. Although intense fighting continues, with ongoing attacks on neighboring Gulf countries and Israel, there's currently no sign of a ceasefire. However, it feels like the impact of this news is starting to diminish. But still, everyone should stay alert because the FOMC meeting is early tomorrow morning, and regarding this FOMC, observe if the market maintains this sentiment after the meeting. Regardless, the FOMC should clear up some uncertainty, which might help the market or the overall index find a clearer direction. All right, today there will be some economic data, but since it's all from before the war, it's not as critical. We'll still take a look at it later. Okay, today we have the PPI. It's expected to be slightly higher. The core PPI, excluding food and energy, is in line with expectations in previous figures. The month-over-month figure showed a slight decrease. We'll see how the data performs. Factory orders are expected to rebound. So the main focus today is the FOMC and what they say. Now for this week's industry activities, let's summarize the OFC plenary session. 3 companies presented at the plenary: NVIDIA, Coherent, and a German aerospace communications firm. I've listed them here. First, NVIDIA mentioned that future AI model training will reach a scale of 1 million GPUs, requiring a comprehensive upgrade of computing, memory, and networking. In this context, significantly low latency and improving the efficiency and reducing power consumption are crucial, and they all emphasize using the micro-ring modulators, then 3D stacked silicon photonics, and CPO technology to solve these issues. Now, on the other hand, Coherent mentioned that they're exploring many different technological advances, including lasers, modulators, and transceivers. They also showcased this 1.6T high-speed transceiver and the brand new SPO packaging standard, mainly to provide faster bandwidth within limited resources and environments, and higher bandwidth and faster speeds. Tesla mentioned that as launch costs drop significantly, in the future they might be able to deploy these massive satellite constellations. The special thing about these constellations is that they can communicate with each other using this laser communication. And this kind of thing might have the chance to become a backup for the current global network or even an independent space backbone network. So I feel like in the future, whether it's computing power or communication, it's very likely that they can be independent in space or completed independently, and it can also support activities on Earth. So this is a future development direction. Okay, so what did we see from OFC? It seems that optoelectronic integration is already an inevitable trend. Although NVIDIA continues to include copper in its future product planning for subsequent development because copper has some physical limits. If you want faster speeds and longer transmissions, or even inside the rack, NVIDIA will also gradually use optical fiber to replace or run alongside copper. But actually, optical fiber represents its status of increasing importance, which means this optical engine It's something directly integrated into the chip. And for the future, this is one reason why optical communication can continue to develop for a while. So, in this context, later on, or in terms of power, in cases where resources or land are limited, low power consumption is the top guiding principle. Actually, many designs are meant to continue reducing power consumption and then to improve efficiency, or rather, improve energy efficiency. Okay, so next, the development direction of this industry has already extended from the seabed to space. Now, we can see that at the beginning, proposing space data centers or space computing and space communication, everyone would think it sounds like science fiction, a special kind of plot you'd only see in movies, but now it looks like it's being realized step by step, because this is also due to Earth's potential resource shortages, causing this development to spill over. The result of having to look forward. Also, what's the impact on the market? It means that the current focus of AI infrastructure investment will spill over from pure computing power to optical communication. So, for a while in the future, besides memory, the optical communication sector will be something worth everyone's continued attention. Those are also stocks within this sector that will have real momentum, so that's a direction we can focus on. In other words, in the future, these companies involved in product shipments will continue to see a boost in their revenue and earnings. And then there's CPO. Although it'll take 2 or 3 years to mature, it's a very clear trend, so it's just a matter of time. For this, well, everyone can start positioning themselves gradually from now on. Moving forward, this includes the design capabilities of these silicon photonics chips, their maturity, advanced packaging technology, and laser modulation, and so on. So, this is really something where everyone can observe the technological shifts and progress and then gradually build your positions. Okay, another point is the revaluation of the space economy, which was the third key point mentioned at the OFC plenary session. It talked about space networks, where optical communication might be used in the future. This is actually a pretty major transformation, and it also means that the entire low Earth orbit satellite industry chain might see an upgrade. You might want to pay closer attention to future developments because much of the space hardware and technology is becoming more complete. There are many possibilities for applications and extensions in the future. All right, the clearest investment direction right now is optical communications plus space. We've listed these targets here, which are the mainstream ones currently, and actually, in the current market, strong stocks are expected to stay strong for a while longer. This means that in terms of selecting targets, it it won't necessarily keep changing. You might be able to identify a few good companies, look at their fundamentals, themes, and technicals. If those are all solid, they could perform well for a long time. It depends on whether you think the whole sector or the overall direction of development has changed. But before any of those changes actually happen, there's a fairly clear long-term trend right now, or a somewhat long-term one. Currently, in optical communications, these are the stocks everyone knows well, mainly LIT and COHR. They are currently the leaders in the downstream optical communication sector, and also, actually, for comprehensive benefits, there's Marvel. We actually talked about Marvel a few days ago. Then there's data center interconnects. Ciena is a pretty dominant player in this field. Another one is AXTI. AXT is still an upstream company right now, but it should continue to benefit as the demand for optical communications remains strong. As for space, it's mainly the three space stocks, RKLB, ASTS, and PL. The other two are more niche-oriented, like IRDM and LUNR. Right now, if you're looking for momentum, the space sector overall seems to be on par with optical communications. Ah, so that's this one. But right now, it actually looks like the optical communication sector as a whole has a much clearer long-term outlook because space is still more of a thematic play, with many companies still in their earlier stages. So for now, if you're looking for stability, optical communication might be the steadier bet, whereas space offers swing trading opportunities with potentially higher explosive growth. And against that backdrop of explosive potential, ASTs currently has the strongest growth momentum, but if you're looking for something more stable, Look at Iridium because it's a company that's actually profitable right now, and they've even done some stock buybacks. So it looks like it'll also rise with the rest of the sector, benefiting as the whole group moves up. That's the current situation. And from a technical analysis standpoint, Planet Labs is looking relatively okay right now. But actually, moving forward, we should keep an eye on SpaceX's IPO valuation because leading up to the SpaceX listing, we'd expect to see a lot of positive news that will drive its valuation higher, and you can see that right now, actually. These listed space-related companies are still a long way off from SpaceX's valuation. Now, the biggest ones are probably ASTS or Rocket Lab, and Rocket Lab's valuation is only around 40 billion or so, which is dozens of times lower than SpaceX's. So, looking ahead, these space stocks could all see some in the next 1, 2, or 3 months. Opportunities for swing trading performance? All right, let's take a quick look at how individual stocks are doing. Right now, we can see that Lumentum has pulled back a bit overall, but it should still be able to move higher later on. And actually, the whole optical communication sector is the same. It's pulled back slightly over the last few days, but moving forward, it should still be able to keep climbing and maybe even break past previous highs. And Coherent is the same. So for now, it really just looks like a brief pause in the middle of an uptrend. As for Marvell, well, with Marvell, you might have to wait a bit longer for this company to see the benefits play out. It'll take longer to see a really significant breakout, and as of now, many of its business units are still in the integration phase, so the trend for this one hasn't clearly emerged yet. Of course, if you're investing in Marvel, you'll need to have more patience. Now, Ciena, the trend for this stock is also looking pretty good, continuing its slow, well, not slow, but steady growth. So if you're looking to invest, you can keep this stock on your watch list and look for the right time to build a position. Then there's AXT Inc., which has been under quite a bit of pressure lately because of, a lot of insider selling. But it should still rise along with the rest of the sector eventually. Right now, we can see that overall, the space sector showed a pretty clear signal yesterday, and that signal could be the first sign of the sector regaining its momentum recently. So keep an eye on it because these stocks all shot up suddenly back in January, right? Then they took a breather, and after resting until now, this might be another point where they start moving again. First is Rocket Lab, which dropped quite a bit pre-market because they're looking to issue $100 million in private placement shares, which is actually just it's a relatively okay investment opportunity because right now, RKLB's Neutron rocket is still expected to make its maiden launch this year, so we'll keep an eye on RKLB's R&D progress and its subsequent performance. As for ASTs, it's also in the early stages of an operational explosion. Moving forward, we'll see if its satellites can be launched on schedule and start providing services. If they actually pull this off, there will be a massive explosion in revenue growth. We'll keep a close watch on that. Currently, ASTS has seen a significant cooling off from its gains at the start of the year, so there's a chance for another run now. Now, PL is consolidating at high levels, which is why its technical chart looks relatively good. It's a subscription-based digital company with a clear partnership with NVIDIA, and they showcased at GTC how they integrate their services with NVIDIA's chips to provide solutions. Looking ahead, this company is a promising target. Next is IRDM. You can see its trend is quite strong. Why? Mainly because this company is profitable. You can see its moving averages are already trending upward. Other companies are still in a bit of a struggle. Right now, IRDM is looking more. If you're looking for something more stable, you could invest in this company because it's just a company that controls key spectrum, and it's definitely making money. As for the future, it should rise along with the sector. It might hit a ceiling eventually, but it hasn't reached it yet. There's still some room to go. All right, next is the moon-themed company, LUNR. Take a look at this. It also made a fairly clear move yesterday. Now, regarding which stocks or ETFs to invest in, you should consider your own risk tolerance and whether you want some aggressiveness to make your own deployments and plans. You should keep an eye on this entire sector, especially since their correlation seems like it will be quite high. So that's something to watch out for. Okay, so we've noticed two things. GTC mentioned space, and OFC also mentioned space. In the past, space stocks were tough because of high costs and difficulty in monetizing, so people didn't know what to do with them. It felt like a new theme, but it lacked a clear path forward. It didn't really feel like it had a future. But now, that future is becoming clearer. Mainly, the hardware and technology are already in place, or the tech is nearly there. Moving forward, they'll be able to do much more. For instance, they used to need to send data back to Earth for analysis, but now they can analyze it right in outer space. So, did OFC mention it? This space optical network might replace traditional radio waves. This topic is going to be a source of more business opportunities or more new blue oceans. Also, once SpaceX goes public, it will become the pricing standard for these companies. It's expected that before the IPO, there will be many more positive factors, and at least a period of market activity. But after the IPO, it's actually uncertain because after SpaceX goes public, the situation will be harder to predict. Because for a listed company, the stock price performance, good or bad, happens very quickly. But at least before the SpaceX IPO, there's a relatively clear market trend. So I'm sharing that with you. Okay, next, let's look at some changes in asset prices. Currently, we can see that the US dollar index is also fluctuating with the development of the war, but it's still at a relatively high level. Another thing is US Treasury yields. As for US Treasury yields, actually, the US dollar index, Treasury yields, and their subsequent performance still depend on the upcoming Fed meeting. For now, these are just fluctuating with market news. You can see that the 10-year US Treasury yield has also shown signs of a slight downward trend recently. The 30-year yield is the same. Now, looking at the stock indices here, we can see that currently the index has rebounded, but this rebound is still quite weak. Yesterday, it hit the 10-day moving average and was pushed back down, meaning there are still many hurdles to clear. For now, we can't say it's completely out of the woods. What's more, oil prices are still maintaining a very high level. As you can see, it's the same for all the indices. For instance, the Dow is also being suppressed by the 10-day line. The Nasdaq is in the same boat, it hasn't broken above its 10-day line either. The Philly Semi hasn't crossed its 10-day line yet. So overall, if you only look at the indices, it might seem like there's no momentum. However, the gains are currently concentrated in certain individual stocks, so keep an eye on those. Besides optical communications and space, the entire drone sector has also shown some performance recently, which is worth watching. Looking at the Russell 2000, it's still in a relatively weak pattern. The equal weight S&P 500 is the same. It even left a rather long upper shadow. Alright, regarding the current conflict involving the US, Israel, and Iran, it's still raging. As we mentioned yesterday, Israel assassinated the head of Iran's security bureau. Now, Iran is retaliating and seeking revenge, ramping up attacks on Israel and neighboring countries to avenge their fallen high-ranking official. Additionally, the Iranian speaker mentioned that the Strait of Hormuz will not return to its pre-war state. It now appears that Iran is expected to exert some influence over passage through the Strait of Hormuz. It seems that any vessel passing through now does so with Iran's tacit consent or permission. Iran will likely maintain this stance. They'll have a foothold and a say in the Strait of Hormuz. Furthermore, we can see that Trump has actually abandoned his approach of asking Asian allies and NATO members to help him ensure smooth passage through the Strait of Hormuz. Initially, he asked everyone for help, but when he realized no one was coming, he basically said, "Fine, I don't want your help anyway, so don't bother." Looking at it from another perspective, this might actually be a good thing. Why? Because it means the likelihood of other countries being dragged into this conflict has decreased. This suggests the fighting might remain a localized regional war rather than escalating into a global one, because if those countries had actually listened to Trump and helped defend the Strait of Hormuz, the situation could have escalated much faster into a global scale conflict. Since that possibility has now diminished, it's actually a relatively okay development. Additionally, a diplomatic advisor for the UAE stated that Iran's attacks on Gulf nations will only push them closer to the US and Israel. However, from Iran's perspective, they're using this method to effectively tie down the US and Israel, making them feel the pressure and the pain. So while Iran's actions might draw resentment from other nations, they will likely continue these strikes. All right, so on the 6th, Japanese Prime Minister Sanai Takaichi mentioned that since she's heading to the United States soon to meet with Trump, the timing is actually quite poor, as she'll be one of the first allies to meet him since the war broke out. Right, so lately we all know that Trump wants allies to step up and help him out. He's just ensuring smooth passage through the straits, but nobody really wants to go, and Japan doesn't either. So now she might, during this trip, well, with Trump, Trump might have some strong opinions, so she said she might use legal frameworks to explain what Japan can and cannot do to try and ease Trump's, displeasure. So the challenge for Sanai Takaichi right now is that while her relationship with the United States is relatively stable, she needs a mechanism to protect Japanese interests while also keeping Trump happy. So that's currently the challenge Takaichi's facing right now. For now, we're still looking at a WTI futures because currently Dubai is, well, it's a bit more limited. It's a futures market that isn't quite as broadly representative. But you can see that overall, no matter which futures you look at, or if you look at any indices related to crude oil, you'll find their trends are still quite high. They're staying elevated, which means that currently if oil prices don't come down, the actual pressure on the stock market will show up sooner or later. Next is this report from Axios, which mentions that since the war started, Trump and Israeli Prime Minister Netanyahu have been talking almost every day, and Trump says they're working well together, but many US officials say Trump is actually the one in the White House. Who's most eager to go to war with Iran? And he might even say that Netanyahu's aides are more aligned with certain extremist goals. So it looks like the leaders on both sides are cooperating very closely for now. But as this war drags on, the goals of the two countries are actually inconsistent. Trump just wants a military victory, and that's a clear cut victory that he's after. But Israel is different. Israel wants completely overthrow the Iranian leadership and turn Iran into a country perhaps like Iraq, making it a relative puppet state with no real influence, so that Israel becomes the most powerful voice in the Middle East, both militarily and economically. But actually, that's going to be quite difficult because Iran is different from other countries. Its historical development has a certain level of depth and resilience, making it hard to destroy like that. So for now, looking ahead, this war doesn't seem to have an end in sight in the short term. Because right now, besides Iran being a tough opponent, the relationship between Trump and Netanyahu is holding up okay. And with the ongoing crisis in the Strait of Hormuz, it means the likelihood of the United States withdrawal is currently quite low. Next, in global news, we continue to see more countries excluding the United States, or a trend toward more multilateral alliances. The EU and Australia are also expected to conclude their long awaited trade negotiations next week. European Commission President Ursula von der Leyen is also expected to visit Australia next week, and there will likely be more signings and details regarding this agreement. All right, next is the US market update. Looking at this FOMC meeting, what should we focus on? We need to look at the views of Fed officials on the economy, inflation, and employment, as well as the interest rate cut expectations in the dot plot. That's the most important part. Actually, we can pay even closer attention to inflation expectations and whether the expectation of 2 rate cuts this year will be scaled back. At the same time, we should watch if the Fed mentions stagflation. For now, we're just waiting. Actually, as for expectations, since Chairman Powell's term is nearing its end, his overall tone isn't expected to change much. He'll likely continue to focus on making decisions based on data. But we'll see if his stance on inflation has become more concerned, and if there's a projection for fewer rate cuts overall, along with considerations like these factors. This is what we'll be able to see a bit later. Additionally, Bloomberg mentioned that currently Overall, market sentiment hasn't reached a level of extreme fear. This means the stock market could still fall further, as it seems everyone feels, oh, it's not that dangerous yet. If new events occur in the future, that fear might be triggered again and the stock market would continue its downward trend. So, where might future risks come from? The central bank could remain hawkish or even more hawkish than expected. Another factor is negative news, driving up energy prices. Overall, he believes that current market sentiment, along with investor positioning, suggests that we probably haven't hit bottom yet, so there's the possibility of further declines ahead. All right, and regarding Goldman Sachs, their head of hedge fund business stated that even though many hedge funds have reduced their positions and asset managers and systematic traders have begun hedging heavily or selling index futures, the stock market hasn't seen a true capitulation style sell off yet. Based on historical experience, the average market decline in such events is 12%. Currently, the drop is only in the single digits. He's concerned that investors are underestimating potential tail risks to the downside. However, he added that people might believe the US economy is resilient and durable. To truly disrupt the current narrative, it might take more pressure than just surging oil prices. That's his current speculation. Still, he suggests that for now, people could consider simplifying their investment portfolios. We should maintain an appropriate level of cash, which might lead to a relatively more balanced portfolio. So I'm sharing this viewpoint with everyone, and you can take his perspective into consideration. All right, and another thing is there's also the fact that recent stock buyback blackouts will take effect starting Wednesday, meaning about 45% of S&P 500 companies will stop repurchasing shares. Starting today and lasting until late April, this could temporarily put some downward pressure on stock prices. Additionally, Bloomberg has published quite a few articles on the current market situation, likely because opinions on the market's direction are quite divided right now. They believe the impact of high oil prices will take time to manifest. Only a quick end to the conflict can reverse supply shortages. Otherwise, they're certain, regardless of how much, strategic reserves are released, or if there are alternative transport mechanisms, it's hard to fully offset the impact of the ongoing blockade of the Strait of Hormuz. Currently, Asian countries are also actively seeking alternatives for LNG because, unlike oil, there are no strategic reserves for LNG. So, if supply is cut off, you could be in big trouble. In other market news, Amazon's CEO mentioned that AI has the potential to drive AWS revenue, reaching $600 billion by 2036, which is double his previous expectation. This means that current tech giants remain quite optimistic about the future of AI and the revenue and profits it can generate. Furthermore, due to the ongoing memory shortage and high demand, Samsung might change its supply contracts to multi-year ones, spanning 3 to 5 years, whereas current contracts are typically on a quarterly basis. This change is intended to hopefully alleviate concerns about supply and shortages by extending the contract duration, addressing supply and shortage worries. Now, we know Micron will report earnings after the bell on the 18th, and currently, Micron is up in pre-market trading, with other memory stocks also seeing pre-market gains. So, what should we look for in Micron's report? We need to see if the memory demand surge can be sustained. If Micron maintains this, tone and the revenue and financial data significantly beat expectations, it could provide further support for the stock price. Currently, it seems the memory theme might already be priced in by the market, so any subsequent gains in the stock market might be limited. More promising investment opportunities might lie in the optical communications and space sectors mentioned earlier. The biggest challenge for Micron's earnings this time will likely be the market's high expectations. We'll also spend some time tomorrow discussing Micron's earnings report. In other news, the US SEC chair mentioned that the frequency of corporate financial reporting could potentially be adjusted based on company size, as it was previously noted that the US is considering eliminating the mandatory requirement for quarterly reports. Instead, only semi-annual reports would be mandatory, meaning whether or not to issue quarterly reports would be up to the company's own discretion. Actually, his proposal to adjust the frequency of financial disclosures based on company size is relatively confusing because, as we all know, in terms of market or societal rules, the fewer the better. If you keep layering rules like this, it just makes things more complex and chaotic for everyone. And in a complex, chaotic environment, there's more room for people to fish in troubled waters or for greater information gaps and asymmetries. So, this whole thing is really just, it'll probably be a while before, a final decision is made. Right now, actually, it's all just discussion of the draft proposal, and reaching a substantive outcome will take some time. So, at this point, the likelihood of these drafts actually passing and becoming law is probably not very high, but we'll keep tracking their progress because currently maintaining quarterly reports is the best approach. All right, finally, let's look at oil prices. They're still quite high overall, so they'll likely continue to pressure the stock market. We'll have to see when that pressure manifests and if other factors come into play and impact the market. Given that oil is currently between $90 and $100, we're maintaining a more cautious stance. However, there are still opportunities. For certain sectors we mentioned, like optical communications and space, it's worth considering swing trades. Optical communications is a clear theme that could play out over several quarters. You should also keep following the market news. And yeah, we should still keep some positions in the market to ride the ups and downs and find some profit opportunities. Lastly, let's check the pre-market movers and also look at the release of economic data. Let's look at the economic data first. Currently, we can see that the overall PPI appears to be higher than expected, and both month over month and year over year figures are significantly above expectations. So let's check the current performance of the stock indices. You can see a clear drop following the announcement, so we'll see if they bounce back. This is the S&P 500, and let's look at the NASDAQ 100. As you can see, both the S&P 500 and the NASDAQ 100 are down slightly in pre-market trading. So it seems this PPI data is higher than expected. Also, for some PPI components, the month-over-month core was revised up, while the year-over-year core was revised down, though the adjustments were minor. Overall, it's higher than expected across the board. It might put a little bit of pressure on the stock market today. Now let's take a look at the pre-market gainers and losers. As we can see, overall, if there are no major surprises today and the Fed's remarks are standard without causing further worry, the market could continue to rise. However, there are many variables today, and we don't know exactly what the Fed will say or what the dot plot will indicate. So basically, everyone should stay alert. Currently, the major trending stocks in pre-market are mixed, and we can see that overall, some sectors are still performing quite well, like before. The positively mentioned AAOI is currently up by double-digit percentages. Memory stocks are still climbing, and as we discussed, the drone stock ONDS and NVIDIA are among those with significant gains. Actually, many small-cap stocks are also seeing large gains pre-market. Let's look at the S&P 500 itself. We can see that currently in pre-market, tech stocks like Tesla, Palantir, and others are all showing slight gains, so the market sentiment today should be okay. Looking at them individually, we can see that quite a few well-known companies are still up in pre-market trading. Right now, we can see some weakness in stocks like Coinbase and Hood. Lululemon is also looking a bit weak. So that's the current situation. For today, everyone might just need to wait and see and pay attention to what we discussed, what to watch for with the FOMC. The most critical thing is whether inflation is picking back up and if there's any talk of stagflation. Also, see if the rate cut expectations in the dot plot have been scaled back. This is the key focus for everyone right now. All right, that's it for today's Capital Bid Night. Thanks for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.